So, what I want to do is make sure that my clients understand the pros and cons of anything that they're doing, whether it be debt consolidation, mortgages, or remortgages. I'm going to tell you right now that debt consolidation is not for you if you're going to continue to live beyond your means. The worst thing that you can do is actually consolidate debt. Get yourself in a good place, have some breathing space, lower monthly repayments, boost your credit score, and then just continue to live beyond your means. If you're just doing a debt consolidation loan for the purpose of getting yourself in more debt, then it's not for you. The other reason why it may not be for you if you don't have enough equity. So, if you're a first time buyer and you've purchased a home 2 or 3 years ago, and then you've realized that in that 2 or 3 years that you've had the home, you've done some refurbishment, you've been using your credit card, and you say, you know what, I saw this video by this guy named Anthony, or somebody's talked to me about debt consolidation, and you decide to do debt consolidation. It may not work, it may not be for you because you may not have enough equity. I do find that because of the state of the economy, most first time buyers aren't paying down 15, 20, 25%. So that means if you've just taken out a mortgage recently and you maybe paid down 5%, you're probably not going to have enough equity to be able to consolidate your debt if your debt to income is too high. So you may say, well, actually, why does that even make any sense? My debt to income is high, which is why I'm getting the consolidation loan. This is why I say don't wait until it's too late. Because your mortgage application, because it is a mortgage that you're taking out, even though you're releasing equity to consolidate debt. The mortgage application will be determined by things like your credit rating, your income, and your debt to income ratio. So if you've waited until it's too late to consider debt consolidation, this is a mistake that a lot of people make and something that you should not do. So have the conversation early. It's not for you if you're too far in arrears. So if you're one of those people that has said, you know what, it's going to just magically get better. I will pay this credit card next month, or I'm expecting this windfall. I'm praying God will make the payment for me. These are all the things that people can do. And then what happens is they get into arrears, then it snowballs into more arrears and snowballs into more arrears. And then they speak to a mortgage broker, or then they approach the bank about doing a debt consolidation loan. But it's too late because now they have so much arrears. Debt to income is high. They need to borrow more money. Their credit score and credit profile are shot. Don't wait until you're too far in arrears. Don't wait until it's too late. Always consider these things, talk to a professional, look at the numbers, weigh up the numbers, and see if this is for you. I'm going to go through what lenders are going to look for in order to do a debt consolidation mortgage for you. So, the first thing that lenders are going to look for is your debt to income ratio, as I said. They're going to look at your available equity. They're going to look at your credit profile. Notice I said your credit profile and not your credit score. They're going to look at your age, the EPC, which is the early payment charge. That's the penalty you pay for repaying a mortgage early. And are there any other cheaper options? So the thing to think about is a debt consolidation loan may not be the cheapest option. You want to look at all the different options. As a mortgage broker, we do have to do additional due diligence when we're doing a debt consolidation loan, because the FCA, which is the governing body that we are all licensed with, they want to make sure that we've talked to you about all the possible alternatives, we've gone through the numbers, and we've determined that this is actually the cheapest and most effective way of putting you in a better position, because a debt consolidation loan should be putting you in a better financial position. I wrote a book. It's called A Mortgage is a Really Big Loan. Now, you might be saying, well, this video or this conversation is about debt consolidation. Why are you talking about a mortgage being a really big loan? Because the book is not just about mortgages. I also cover off just basic financial literacy, how to improve it, what certain terminology means, because you might be an adult and you're in the world and you're doing the things that you need to do, and you hear these different phrases bantied about, and you just feel embarrassed to ask what they are. You may go on ChatGPT or you may ask Claude, but you still don't understand. So this book is to explain credit, income, deposit, investments. I'm not giving investment advice, but I talk to you about different things. So make sure you check it out. It's available on Amazon. But let's just start with credit. Your credit is something that you want to make sure that you keep under wraps. You want to make sure that you understand what is on your credit report at any given time. I find that when I'm doing mortgages for people, it's very rare that they get their credit report, which is one of the checklist items that they need to send to me in order for me to do a mortgage or a debt consolidation. They send me the credit file, and it's very rare that they know everything that's on there. Usually, what they find on there is there's a mobile phone bill that they thought the contract had ended and it didn't, and the person kept billing them, then they disputed it, and whatever. Parking tickets. This is another thing. Parking tickets that people haven't paid that then end up going on someone's credit report, or even worse, it may end up as a county court judgment or CCJ. So make sure that you look at your credit report at least once a year. But you know what I'm going to say next? I would recommend that you check your credit report at least twice a year. So at the beginning of the year, as you're budgeting for the year, and halfway through the year. Check your credit report. That way, if there's anything on there that shouldn't be on there, you can resolve it quickly. Also, we live in a world, unfortunately, where there are dishonest people. So you do have people that steal identities, take out credit in other people's names. And if you are the victim of that, so if you're a person that someone has taken out a credit card in your name or is even searching, by reviewing your credit report regularly, you'll be able to pick up on it before it becomes a problem, and certainly before you decide that you're going to move forward with a debt consolidation loan. The platform that I recommend that you use is Check My File. That's checkmyfile.com. I'm not affiliated with them in any way, and I don't make any money for telling you. But the reason why I would say Check My File is because we all have access to our statutory credit report. We can access things through our bank, Equifax, TransUnion, ClearScore, Credit Karma, all of that. But the Check My File credit report is going to give you a consolidated report of all three credit reporting agencies. It's going to show you searches. It's going to show you your address history if you're on the voters roll. So if you understand what your credit file looks like, it will put you in a better position to understand what debt you actually have, how you're managing the debt, and if a debt consolidation loan may be right for you. Your income. Usually, people are in debt is because they spend more than they make. So look at what your actual income is. Know your employment status. Are you a full-time employee with a fixed base salary? Are you self-employed? Are you part-time? Are you contractual? Are you a contractor? These are things that will impact your mortgage application when you're doing debt consolidation. So understand those things. If you find that each month you have month left over at the end of your money, as they say, then what you might want to consider is a side hustle. Do you have a skill or a talent or just something that you could do that you could use to make more money? Because before you consider a debt consolidation loan, you do want to explore other things. So are you a creative that could do logos for people? Do you understand AI better than other people, and therefore you could train people on AI? Look at other ways that you can make money, understand what you have going out, and consider different ways that you can pay down the debt before you do the debt consolidation. My name is Anthony Lindsay, and you can book an appointment with me. So there's a QR code right here, my phone number and my email address. I'm a licensed mortgage broker, but more importantly, I'm here to answer your questions. I don't charge for a conversation. And as you can see, I do like to explain things in depth that you can make an informed choice. Make sure that you like, subscribe, and comment on this video and share it with anyone you know who might find it useful.